Okay, let's shift gear a bit. Corporate reporting, getting your story out, moving beyond the financial statements. John, MD&A, you're working through quite a journey over Economical. Maybe share that with the audience.
Well, thanks, Don. I'd be happy to speak about the Economical story. For those of you who don't know, the Economical Insurance Company is a 145-year-old property and casualty insurance company based in Waterloo, Ontario. But we have operations right across the country. Economical is a mutual company. We have no shareholders. And it's fair to say, historically, our corporate reports were really of interest only to our regulators, not much more, not many more people. So you may wonder why Don would ask me to speak about Economical, or why Economical has much interest in corporate reporting. And as Don alluded to earlier, here's why. We are on the path to demutualizing and becoming a public company over the next few years. We only have a very narrow window of takeover protection after we demutualize, so it is really important that we can ensure we can attract and retain long-term investors who buy into our story. So with that as background, I wouldn't mind sharing 3 ideas on corporate reporting strictly from an economical lens. The first is the importance of getting our story across. That's key. Then we need to balance value realization and value creation in how we tell the story. And then I'll share why we think MD&A and non-GAAP measures may be the best tools available to us to do just that. Hopefully some of this will resonate with you as you think about your boards and audit committees and telling your story from a corporate reporting point of view. For us, getting our story across is really an important part of our journey, as I said. We need to be able to give readers insight into the bright future we envision for Economical. But we also need to make sure we're permitting them to evaluate how we're doing. Corporate reporting is all about informing and helping better decisions to be made, and also about holding management accountable, and that's what we intend to do. Certainly sharing our strategic choices and milestones we achieve along the way will be critically important. Certainly important to attracting investors initially as we go public, and then after we are public, ensuring that we're able to show how we're tracking to deliver on the long-term value that they hope for. We've already started the journey to ensure we are public company ready when the time comes. We implemented a public company reporting process a few years ago, and while our initial focus was certainly on the compliance aspects, we've certainly now shifted to look to the quality of our reporting as well as compliance. As we go, and in our process, we are going to try and emulate the public companies that are trying to make their reporting simpler and more meaningful and understandable for their users. It won't be easy. We already know, because our annual report in 2014, including our MD&A, was 106 pages long. So we certainly would like to see some rethinking of the standard setting that requires such voluminous and complex disclosure requirements. But that said, we need to get our story out, and we will within the framework that's available to us. Our emerging vision for corporate reporting requires us to balance how we report, how we realize value today, with how we manage our resources to create value for the long term. If that's our role, then I think we need to be able to explain our value creation story, which is all about investing and innovating to serve our customers and getting to the scale we need to leverage those investments for the long term. If that is our story, I think logically there are things that readers should be expecting to see in our reports. How we are investing in leading-edge technology, how we're using data and analytics to inform our underwriting and pricing practices, how we use predictive models and mapping to understand and manage our exposures to increasing amounts of weather-related events, how we respond with products and prices to address technology advances in the world around us, telematics, driverless cars, the Internet of Things, how we develop our capabilities to participate in industry consolidation in a meaningful way to get that leverage I referred to. And there's more we can do, too, in terms of sharing how effective we are at engaging our people in the journey, what measures we're taking to build our brand, and in that process, provide broker and customer loyalty measures. Those are all indications and indicators of things we're doing to create value for the long term for Economical. The question is now, how do we convey that? And for us, I think it will be really focused on our MD&A and putting discipline into non-GAAP measures that we use. MD&A is probably the most logical place to share these value-creating initiatives. That forum is amenable to that kind of disclosure because it can speak to concepts that go beyond the numbers. It isn't easy because, as I said, just producing the numbers is all-consuming. We've spent a lot of time and resources to build the infrastructure to produce the numbers required of a public company. To refocus our MD&A, we then needed to build a communication mindset to tell the story that goes beyond the numbers. That meant adding expertise, but also getting our people more focused on how we do tell the story. Despite challenges, I think we've made pretty good progress in enhancing the depth and quality of our performance discussions in our MD&A. But we have a lot to do. Remember, our annual report is 106 pages long. As we continue to consider and work on how to use our MD&A, we have another major challenge on how we use non-GAAP measures. In our industry, in the P&C industry, we can't fully communicate our performance and strategy within the GAAP prescribed framework that applies to us. As an industry, we have critical non-GAAP KPIs that are used by all participants, claims ratios and expense ratios and minimum capital tests, net risk ratios and net premiums are all important measures used in our industry. They're helpful in assessing how companies are growing, on how they operate with effectiveness and efficiency, and how capital reserves measure up against liabilities. They're important in competitive benchmarking. They're critical in telling the story and measuring performance. I guess the odd thing to us is that most of our critical reporting measures aren't considered GAAP. It even leads us to the question whether the standard setters are really in touch with our industry. But again, that said, one way or the other, getting our story out will certainly mean our reporting must communicate these non-GAAP measures clearly, very clearly. Since they're not GAAP standards, our board and audit committee are really needing to focus on understanding clearly how those measures are determined, confirming that as we compare them with competitors in our industry, the comparisons are valid, and that links in our compensation program to those important indicators of our performance are clear in how they support the achievement of our long-term objectives. So that's a bit of a glimpse of where Economical is on its journey to be a public company. I'm the first to acknowledge we're neophytes in our journey, but I think sometimes that can be a good thing. We can take a fresh look at our reporting And we have actually used that perspective to ensure our reporting aligns with our long-term ambitions for our company and certainly for those who choose to invest in us. As our process evolves, we'll certainly explore areas for further improvements in our reporting as we follow the ongoing discussions around things that can be done to improve public company reporting. And Don, maybe before I throw it back to you, I'd like to leave you in the audience with a bit of a parting challenge for your board and audit committee, and I would do that by as you think about my discussion and description of some of the things that Economical aspires to do from a corporate reporting point of view. I wonder if you might ask yourself these three questions. The first is this: does your corporate reporting do a good job in telling the story you want your readers to hear? Second, do the readers of your reports have a good sense of how you're creating value for the future? And then, do you report on KPIs that have a clear link to the story you want to tell, to how you create value, and to how you compensate your key people? And I guess I would ask you to ask yourself, if your answer is no to any of those questions, then maybe you need to give some more consideration and thought to where your corporate reporting needs to go. And Don, with that challenge, maybe I'll throw it back to you.